Awesome. Well, thanks everybody for being here. My name's Tibby Erdely. I'm one of the co-founders of Key Investment Partners. We are a Denver-based private equity firm, currently focused on raising and deploying our second dedicated fund. I've got Zach, Matt, Kevin, and Yulia here. Zach, Matt, and Kevin are actually a part of the Key family. They're three of our partner portfolio companies, and had the pleasure of meeting Yulia today, who works in the compliance industry, which is certainly one of our favorite aspects of working in cannabis. Anyways, without further ado, I'll go ahead and let everybody introduce themselves in order here. If you want to tell everybody, Zach, a little bit about what Grassdoor does.
Sure. My name's Zach. We are one of the largest cannabis delivery services in the United States, primarily based here in Southern California. Started as a software development company. We have about 150 employees in our own office in India, and took those engineers and completely automated a cannabis delivery service.
Can you guys hear me?
No.
It sounds like Matt's having some mic problems, but Kevin, maybe you want to go?
I'm Kevin Bush. I'm the CFO and COO of Sweetleaf Madison Capital. We are a specialty lender. We provide debt capital, seed to sale, to operators, whether they're cultivators or processors or dispensaries. So we provide real estate loans to them, working capital loans, equipment finance. And the reason that's interesting, as many of you know, you cannot borrow from a federally chartered institution because cannabis is a federally illegal substance. So they have to come to specialty finance people like us to finance them. There's a shortage of capital in the industry for a very capital-intensive business.
Yulia?
I'm Yulia Kalk. I work with compliance consulting firm CompliSci, not cannabis consulting, actually investment consulting. So people like your guys' funds need compliance. That's what we do. We don't specialize in cannabis, but we help firms avoid problems related to investments or managing investments in the cannabis industry.
And Matt.
All right, hopefully my mic's working now. So my company is called Catalyst. I'm the co-founder and chief revenue officer, and we are a marketing technology platform. We drive traffic and sales for brands and platforms in the cannabis space. And really, most recently, we acquired a company called 1.0, and now we also do embedded commerce, which allows us to distribute an e-commerce storefront across any omnichannel media. So that's us.
Awesome, awesome. So just quickly in the audience here, who all is familiar with the cannabis industry? Maybe raise your hand if you've made investments in the past, et cetera. So as a quick update, just overview of the market, and then we'll let these guys talk about how they are approaching, the market as well. The industry is being legalized very quickly. It's one of the reasons why we got involved in the first place. This is an industry that's extremely capital constrained. I think any of these guys up here can tell you about some of the woes from a cap markets perspective, but nonetheless, it's still growing, pun intended, like a weed. There's close to 38 states now, including DC, that have some form of legal cannabis. It's all truly being driven from a grassroots movement at the state level. We definitely think that the time of the politician kind of falling on the knife to legalize cannabis is beyond us now. We actually think it's going to be more of a critical mass thing with states coming online one by one. So you get to a point in a few years where you got 43, 44 states, and all of a sudden the political risk to legalize federally makes a lot more sense. So we are investing for the cannabis companies of the future. We've found some really great opportunities in what these guys are doing here on stage. So kick it off with Zach. Zach, maybe tell us a little bit about DTC in the cannabis industry and how you guys are tackling e-commerce.
Sure. By the way, my company's called Grassdoor, so that's the name of the business. We created such an automated platform over the first couple years that when COVID hit, we were the only company that really could scale. So we quadrupled, in the matter of about 90 days. We hired hundreds of drivers. We have about 500 full-time drivers now. And as the platform matured, we knew that we had to let other brands tap into that infrastructure and tech. So we launched what we call direct-to-consumer. So almost every brand in California now has a buy now button on their website, and all of those orders are filled by our drivers, our inventory out of our warehouses. So there's about 100 websites now feeding orders into our back end. And it's very similar to what you'd see in other industries, but in cannabis, it was essentially not, it didn't exist prior to Grassdoor making our infrastructure available. So it's a retail business, Grassdoor, we have a few other brands, and then there's this D2C business.
Yep.
So it's kind of two businesses.
Yeah, that's certainly one of the things that stood out to us when looking at Grassdoor is the unit economics just makes so much more sense than even traditional direct-to-consumer platforms. Like you think about grocery or food delivery. First of all, you can put a lot in a little bit in a cannabis package, and it doesn't have a long, it's got a much longer shelf life than say food delivery. So the unit economics are, we think, just much more attractive for cannabis deliveries. So we're super excited about what these guys are doing here.
It's about $100 average basket, average delivery, and then the average customer orders twice a month. So there's about $40 of profit per delivery.
Yep. And so, one of the other sides of the industry that's notoriously difficult is marketing and getting your brand out there. You can't advertise on traditional mediums, and that's actually where Catalyst really came into play and why we thought that these guys were so attractive. So maybe talk a little bit about what Catalyst does.
Sure. Yeah, so believe it or not, Google, Facebook, YouTube, Amazon, they don't really like the cannabis industry so much, at least not yet. So it's been very difficult for cannabis and CBD brands to find platforms and ways to market their businesses. And so really we saw an opportunity early on. My business partner and I really saw where the trend was heading, first in the CBD space, because CBD was able to be transacted online through most e-commerce platforms. And so we focused there, and we're able to drive, at this point, tens of millions of dollars in sales for our CBD brands because we set up a platform that facilitates performance partnerships between media companies, influencers, email marketers, media buyers, etc., and then has them drive traffic directly to the brand's website. And so we've been able to set up at this point thousands of these partnerships across our ecosystem where traditional platforms are not allowing these type of traffic and relationships. We are facilitating them on a consistent basis. So that's really how we've been able to help brands and platforms even like Grassdoor. We actually recently started a partnership, and we've been able to drive a good deal of sales for them in a short period of time.
Yeah, and we totally believe in synergies across the portfolio companies. And Kevin's company here, Sweet Leaf Madison, is certainly falls right in line to that story. And I mentioned that the capital markets are extremely tight. We help bring solutions to these companies, but Kevin's company as well does that from a financing perspective.
Sure. The cost of capital is very high in cannabis, as you can see. By us providing debt capital, it's very attractive to operators because no one wants to be diluted. And so we kind of fill that niche. The challenge of lending to the industry, though, or investing in it, is every state is like its own country.
Yeah.
Everyone has its own supply and demand dynamics, as well as its own rules and regulations. So what makes sense or business models that work in Ohio may not work in Michigan or West Virginia. So that's really the challenge and the unique opportunity in this industry is unlike other markets where you look across the United States and you have a pretty good idea of what a mid-sized car market is going to be like. It's different for every single one. So our challenge is to understand the markets and then come up with debt solutions that work for that state and that borrower.
Yeah, and I see Yulia shaking her head there when he was talking about every state being like its own, country or cannabis economy. Maybe tell us how that brings in some complexities from a compliance perspective. What are maybe some do's and don'ts across the board?
Well, I think the main complexity with investing in cannabis is just the understanding of what regulation applies from the investment standpoint. I was shaking my head when Kevin was saying about different state regulations. For cannabis market, there's different state regulations for investing. Each state has their own rules. And then we have FINRA on the broker-dealer side, and the SEC on the investment advisor side. So understanding how do you navigate the investment space without crossing the lines, compliance lines, becomes very important as you raise your funds, as broker-dealers play in a cannabis industry, the main question that actually stops people from investing, sometimes allowing their people to create funds and invest, is not understanding how do you operate from compliance standpoint in that industry. And the truth is that there are no specific rules for investing in cannabis. Therefore, actually, regular rules apply. I went through a number of disciplinary actions to see what the regulators have done in terms of punishing people for violating rules as they relate to investments in cannabis. And the actual regulators just go at you for violating normal rules. You know, you didn't, you violated some well-established rules in how you invested in, or how you did due diligence in private placements, for private placements, or a registered rep for a FINRA firm did not disclose that they also maybe are in a partnership with somebody else and then they're involved in cannabis business. So the punishment comes down not because that's a cannabis industry, but because you violated some other rule. And that's how the regulators are looking at it.
So in other words, everybody has to play by the same
Yeah.
set of rules. Would you say that cannabis companies are maybe under a little bit more of a magnifying glass than other companies?
Definitely, it's very similar to crypto space. The regulators, because they don't understand it, which always makes it very dangerous for firms to invest in something that regulators don't fully understand. That will be your number one target. So I would say that making sure that your compliance is really tight and clean around those investments is probably your number one way of defending yourself.
That makes sense, especially from a cap markets perspective.
Yeah.
But now, kind of going back operationally from a compliance perspective, there's a lot of regulations that you have to adhere to. Maybe talk about some of those complexities that you guys have to build into that maybe a traditional DTC platform doesn't have to worry about.
Sure. We tend to think that wage and hour and just normal issues that
Yeah.
you have in California are more difficult to comply with than the cannabis regs themselves. So wage and hour, breaks, clock in, clock out, all that kind of stuff, overtime. And so unlike an Uber or a DoorDash where you're just using a 1099 driver, all of our drivers are full-time, W-2, health insurance, full benefits. We have to pay them 62 cents a mile. So all of those things to make sure you don't get caught up with some sort of plaintiff's case is the challenge. And because it's so challenging, and then you add cannabis compliance, you have to have tech, you have to have automation, and there is no enterprise level technological solution for cannabis delivery. We're the only ones that have the platform to do cannabis delivery at scale.
And Kevin, so we're talking a little bit about, from an operator's perspective, the compliance hurdles from a FINRA SEC perspective, but what about when you're underwriting a business? What are some of the red flags that maybe you guys are looking for or staying away from?
So we're a non-bank lender. So from that perspective, our life is way, way easier than if we were a bank lender. That being said, we eventually will be owned by a bank, or when there's reform. So we have more flexibility. Our biggest challenge, though, it's really cannabis is a bit of the Wild West, and you've got all types of characters. You want to make sure we're not lending money to people doing it illicitly. Apparently, there's some cannabis is going out the back doors of some of these facilities as opposed to dispensaries. That's completely illegal. That's drug dealing as opposed to medicinal. So we're very interested in making sure we do a KYC, source of funds, the things that a traditional bank would do. We're doing anyways because one, it's good business, and you don't want to be dealing with sketchy characters.
And that's one of the things that the SEC has gone after people for, is not doing due diligence.
Yes, exactly. So we have an extremely thorough underwriting process, and again, because it's cannabis, just like other industries, you're more likely to find some unseemly characters,
Yeah.
as opposed to maybe someone who's selling, toothbrushes, right?
And there's so many folks out there that still think that cannabis is unbankable, but the truth is there's a lot of state chartered banks, credit unions,
That's true.
regional banks that are now servicing the industry. So clearly, it's not illegal to service the cannabis industry. What's the difference between a state chartered bank or regional bank servicing the industry versus, a major, U.S. national bank?
Sure. The biggest difference is because marijuana is illegal at a federal level. Anyone that deals with federally chartered banks, interbanks, they won't touch it. State-wise, that's not necessarily the characteristics. I mean, the whole industry is fascinating because you have this illegality at the federal level, legal at state. It makes things complicated. It also creates incredible investment opportunities. But that's the general difference. I'll just add one quick kind of anecdote. When I was at a large operator, as CFO there, we banked with a credit union, and they know you don't have a lot of choices. Our monthly service fee, I pay about $15 my own personal Chase account. Our monthly service fee was about $12,000 a month just for having the account. So they see you coming.
Yep.
But that
I
will
mean,
change over time.
We experience the same. We're 2 or 3 times removed from generating the revenue that touches the plant. Jordan, what do we pay for a bank account on a monthly basis? 300. Yeah. So
Right.
it's not illegal to bank a cannabis business, but that monthly service charge, at least my understanding, is because it's paying for such a heavy compliance burden to ensure that the cannabis companies that you're servicing aren't laundering money, et cetera, as discussed.
Right.
We have East West Bank. Why do you think East West Bank is able to bank some of us?
Here's the thing. It's not. They're making a calculated decision, quite honestly. Almost everyone feels the way that the feds aren't going to come down on this in a lot of ways, but it's a calculated decision. That's my quick answer to it.
And do you think that the more that you are removed from growing?
Absolutely.
Yeah.
So what's nice about, to talk my own book just for a second, we're lenders, so we don't actually touch the cannabis. So people are interested in kind of cannabis curious, we call it. If you're lending as opposed to owning to the operators, you're once removed. So we're once removed, not way far away, but technically we don't own any licenses.
Yep. And so kind of switching gears, but still on the compliance side of things, going to Matt now with Catalyst. You're working with so many different brands and so many different publishers to drive traffic and drive e-commerce revenue, but you're kind of handcuffed. You can't go advertise on Facebook or on Google. Like, what are you guys doing to remain compliant, and how are you guys kind of getting around that to drive traffic?
Yeah, so we don't have the ability to go out to traditional platforms to go and buy media, but we've been able to set up content marketing partnerships where we'll create articles, listicles, reviews, etc., where people can find them on Google, read the article, read the review, and say, okay, now I want to go and buy that product. And so all of our partnerships are set up on a performance basis. So really, from a compliance perspective, if we find that any of our traffic providers are non-compliant, we can immediately shut them off, and then there's no longer a marketing relationship between the brand and the publisher. So when it comes to cannabis compliance specifically, we've had to, with our attorneys, structure our deals a little bit differently than we normally would, because we can't actually participate in a transaction when it comes to THC cannabis. So we're more working to send traffic to get paid for a lead. So it's a little bit different in terms of like how we work with a THC brand versus a CBD brand or any other normal brand.
Well, I think it'd be curious to hear an example of exactly how you send a lead, and we've got a great opportunity to talk about how you two work together. So I know that you're sending traffic and driving leads to Grassdoor. Can you maybe give us an example of what that looks like?
Yeah, absolutely. So we might have any third-party traffic provider. In a great example, it might be like a healthline.com. Healthline is one of our bigger publishing partners, and they'll create content about products related to CBD or cannabis or really any other health and wellness vertical. And then our brands from our platform will put up an offer on the platform and say, hey, I'm willing to pay X for a completed transaction, for a closed sale. And so our platform, we've built an identity graph which allows us to track and attribute sales across that entire ecosystem, from when someone reads an article to then clicking on a link that takes them to the brand's page. And when they convert on that brand's website, then that sale is commissioned back to the publisher. So we're able to track and attribute all of that through our platform, and that's generally how we're able to drive sales today. So, working with Glassdoor, we've set up a relationship where now we have these types of publishing relationships that we're sending at this point, thousands of consumers to Glassdoor's website to go and buy a product, and then when they do actually convert and buy a product, we're getting paid a fee for sending over that lead.
About $50.
All right, I'll take it. So moving on to Glassdoor now, the title of the conference, Future Proof, right? Investing for the future. Where do you see Glassdoor going in this current market environment where you're operating under some pretty tough regulatory standards? You're dealing with 280E, tough taxes, et cetera. How do you evolve beyond that? How has that maybe forced you to be nimble in this environment? What do you think you expect for your company, say, upon safe banking or federal legalization?
I think most companies or people that went into cannabis, there was this kind of green rush, feeling that it was easy money. And so most people went into these kind of stopgap solutions, not willing to touch the flower itself. So that makes them non-flower touching versus Glassdoor is a flower touching company. And I think we're the only flower touching tech company. So every other tech company is not touching the flower. They don't actually know, what day-to-day operations require. They're kind of guessing. They're very surface level, whereas we're managing drivers, performance metrics, and figuring out how to optimize routes. So we look at a lot of the public companies as total stopgap solutions. As soon as Google can start to advertise and you have access to social media, so many of these business models will go away. So we're actually doing the hard work of delivering thousands of cannabis orders per day with hundreds and hundreds of employees. It's future-proof, I would say. It's much harder. It's not a temporary opportunity.
Yep. And Kevin, so kind of switching gears over to you, thinking about maybe safe banking or a broader opening of the capital markets, more traditional institutions coming into the industry. Do you view that as hurting your competitive moat, or how do you kind of differentiate yourself for tomorrow?
Well, we're fully aware that eventually we believe there'll be safe banking, and we're preparing for it. Our view is it's always going to be a specialty spot. It takes very kind of niche knowledge to kind of lend and make deals in the cannabis space. But what safe banking will bring, it will also lower our cost of capital. A lot of people forget that. Like we borrow money, we make a spread, we make a large spread because it's a risky business. When safe banking passes, our cost of capital also go down, and we'll pass much of that along to our borrowers. So we're interested in building a brand as thought leaders in constructing bespoke debt solutions for the cannabis industry, and the spread will compress as it's less risky. But a typical specialty lender can make 300 or 400 basis point spread. We're obviously making a lot more than that now, but it's also riskier. So you'll see the cost of capital come down for everyone, and we're positioning ourselves to still be that preferred solution provider, even with a lower cost of capital.
Yeah, and I think that comes with the idea of specialty finance in the first place. So compliance, let's come back to you and compliance of the future. It's really been our understanding that we're actually working more closely with the regulators to come up with what the rules and restrictions are going to be tomorrow. Can you tell us a little bit about what your expectations are?
I actually don't expect that there will be something new that's focused on just the cannabis industry in financial regulations. It makes no sense to have it because really all you care about is clean investing. Managers like you guys doing a good job, doing due diligence on the portfolio companies, making sure that you're not that you're basically sticking to your fiduciary responsibility to your investors. There's really not a lot of differences or none, just really the product that you're investing in. So due diligence really is the focus. It has been and will continue to be. And then also like any other issues that may come up where, money laundering obviously is a big deal. How will that play when federal regulations approve cannabis and safe banking? That there will be less concern about money laundering in the cannabis industry. There still will be because there's always that concern.
Yep.
So I don't think that that will change a lot of things, but it will allow a lot more players, a lot that are super conservative now, that are not allowing their registered reps or not willing for their own companies to step into the world. That will change.
Yep, yep, absolutely. And Matt, talking about future proof, everybody's thinking about regulations and where things are going, but I think one of my favorite things about you guys is that you're actually building technology that is tangential into other industries already today. Maybe talk a little bit about how you guys are thinking about taking what you learned in the greenfield opportunity, which was cannabis, and then spreading that into other industries.
Yeah, I think due to the nature of compliance and regulation in the cannabis space, it's really forced us to innovate and find new ways to serve our customers, serve our clients, which has led us to really innovate in our entire industry. And so now we've started to diversify away from solely focusing on the cannabis and CBD space. And we're working across all of CPG and even some finance categories as well. So we have brand partners we work with in pet products, clean beauty products, other health and wellness products, but also insurance, car insurance, pet insurance, some other verticals as well. So because we were born out of the cannabis space, it really pushed us to find new ways to generate business, and that's then opened up now going to other industries and be able to provide our services kind of unilaterally to anyone who has an e-commerce platform or e-commerce business.
Yep. And I think that that's something that really resonated with us from the get-go and starting Key was that because the cap markets are so tight, because these companies are operating with essentially regulatory handcuffs behind their back, they have to find new ways to innovate to basically improve their margin profile, whether that's through creative accounting or through finding new lines of business, et cetera. You do see a lot of really young, innovative, nimble companies in the industry. One last question for you, and then we'll turn it over to Q&A based on the clock here. Kevin, I wanted to talk a little bit about, given that you guys are also underwriting opportunities, obviously in a different vein than what we are, what are maybe some of the opportunities or some of the challenges that you commonly see out there with the more traditional operators in the industry?
So they all go through this life cycle, I noticed, and I lived part of this life cycle when I worked for an operator. Almost everyone, I'm sure many of the advisors here know of someone who has a license, maybe a single dispensary somewhere, and they're raising maybe a million to two of friends and family money. And I've noticed that people are usually able to kind of cobble that money together in their own community to open a store. And then you see the big cannabis companies, and by big, they're not big. The biggest company is 4 billion market cap, but we still call it big cannabis. They're borrowing 50 to 100 million at a time, and you'll see a couple of institutional lenders step in, and then there's this, and you can invest in these institutional lenders or publicly traded REITs, as many of you probably know. And then there's this yawning gap, and I experienced this as an operator, and this is where we're filling the gap as a lender. Somewhere between 3 and 25 million is just crickets in terms of where you get capital from. You can't cobble together 5 million with your friends and family, and bigger lenders aren't going to take the risk on a $10 million deal. It takes a lot of due diligence. So that's probably the most challenging spot for capital raising. It's kind of it's also the most exciting spot. So we're focusing on that area. The upside is because there is so little capital there. It's scarce, and the pricing is good for us, but we put in a tremendous amount of handholding. We're often the first institutional raise from some of these former mom and pop shops, so it takes a lot of work. But that's the opportunity and the challenge, I believe, in that area. They're not just beginning, and they're not passed off to the large lenders.
Yep, awesome. So kind of hard to read the screen here, but what are your thoughts on the Canadian cannabis market? So I'll pass the question on to all of you. I'll start to say that at Key, we have some indirect exposure to Canada, but simply put, the sandbox in the United States is so much more attractive. We've got a much larger addressable market. We've got a more, frankly, a way more mature black market that's been around forever, right? So there's a lot more of a cannabis legacy here. if you want to go grow weed in Canada, good luck versus doing that in California, honestly. But where Canada does have an advantage is that they're federally legal, right? So the cap markets have been open for a long time. I think a lot of retail investors don't realize that when they're investing in the Cannabis or the Tilrays of the world, they're actually investing in Canadian operators that are listed on US exchanges, whereas the more attractive operators like the GTIs or the Curaleafs or et cetera, True Leaves of the world, they're all listed on the Canadian Securities Exchange. It's a obscure, low volume, low liquidity exchange, not well understood, but that's actually where we think most of the opportunity is. So if you're looking at the public markets, you're probably going to be looking at the Canadian listed U.S. companies. Anyways, I'll pause there and see if anybody here has any comments on Canada.
Small market.
All right, small market,
We stay away right now.
we stay away.
There's plenty of demand for us in the U.S. without doing deals in Canada. So we're staying away, not because we don't like it. It's just we don't need to go
Probably
there.
easier from a compliance perspective. for you
Absolutely.
that
So we're already dealing with every different state. So
yeah.
Actually, the marketing is highly regulated in Canada too, so that's one of the reasons why we don't.
Yeah, you can't really package edibles a certain
Yeah.
way and all that.
Yep.
Look, the Canadians got ahead from a cap markets perspective, but otherwise, it's not that exciting to us at least. Question number 2. Can you guys read that?
How do you expect the cannabis industry to fare in a recession?
Like,
Are things like booze and other discretionary items good comps?
So I can answer that with a direct comparison. I mean, during COVID, right? We were in the middle of fundraising, and we thought that is my thing coming in now.
we're good.
A little bit.
We thought that it was going to be financial ruin for us. And about a month into COVID, data started coming out that people were smoking more weed and consuming more cannabis than they ever had before. So the conclusion there is pretty simple. Similar to booze, et cetera, it's a vice industry. We expect for in the good times people to consume, in the bad times for people to consume. Where I think things get more exciting, really from an investor's perspective, is that the black market still dominates the U.S. cannabis industry. We're talking about maybe a $33 billion legal U.S. cannabis industry this year, but the black market's still estimated to be somewhere between 70 and 100 billion. So call it 2 to 3 times larger than the legal market. So not only do I expect for cannabis to fare well in a recession, I expect for a recession to actually increase the pace at which states are looking to legalize cannabis as a means to fill their budget gaps. We expect if there is a recession, it's going to act much like a commodity where you have, a little bit more security there. And then lastly, because legalization's happening with regulatory tailwinds, you would expect for a lot of that black market demand to continue to evolve into the legal market. So you don't just have growth coming from consumer demand, which is obvious. You have growth that's being driven by something that's been forced to be illegal for a long time that is right in front of us being legalized, slowly. Sorry, I took the whole answer on that one, but I don't know. Do you guys want to jump on that?
I would just say that the black market, the biggest headwind is probably that it used to just be flour, and black market flour was probably fine. But now that people want edibles, vape carts, concentrates, vape pens, etc., you'd be less comfortable buying a vape pen from the black market. So that trend is certainly driving people to legal cannabis.
Any more comments there?
I just remember COVID was the perfect storm as an operator. Everyone was staying at home, and the government sent them checks, and sales went crazy.
That's true.
It's true. So we have a question on there. I kind of touched on this at the beginning. Should I just take this off? Is it?
No, you're good.
Fine.
So it says, do we really expect for cannabis federal legalization to happen in the next 5 years? I gave my thoughts on that at the beginning. I'll let you guys comment on that.
I hope so.
Yeah, I sure hope so as well, just from a pure advocate standpoint. But in our political climate, who knows what's going to happen?
I personally don't ever anticipate full-blown legalization. The reason is it would be a spectacle. Those who oppose it will be parading, kids who went down a dark path and blame it on cannabis. But what I do expect is continued smaller reforms around the edges that will make it capable to do business, such as safe banking, things along that. So will it be a broad, cannabis is legal federally? Probably not, but will they do changes along the way that make it capable to do business? Yes.
Any comments on that, Yulia?
No, I think that financial regulators, follow federal regulation, and then because there have been no specific cannabis-related rules created, I think they will just continue to be more and more normalized. Investing in cannabis industry will just have to follow the same rules, and people that want to raise funds and be the placement agents, etc., for cannabis industry are going to have to remember to follow those rules.
Yep. So we take a pretty open stance at Key on what we think federal legalization is going to be and on the process to get there. So first and foremost, we think that there's actually a pretty decent chance that Safe Banking Plus gets passed this year. That will essentially open up the cap markets to the cannabis industry. Not fully. We don't necessarily expect for the NASDAQ or the NYSE to allow for uplisting, but what it should do is start to solve a lot of the banking issues, hopefully get rid of 280E, et cetera. That should be a big precursor to ultimately having federal legalization. If you weren't here at the beginning, we're at a point now with close to 38 states that have legalization. It's actually our view that federal legalization probably is around the corner in the next few years, and it's more a critical mass thing. We get to 44, 45 legal states, it starts to become an issue of fixing the interstate commerce, because right now you can't transport cannabis between legal cannabis states. Also, if we want to compete globally on the international scale, where cannabis legalization is also gaining a lot of traction, we're going to need to federally legalize cannabis in order to have international trade from a federal perspective. So we do think it's going to happen. We do think it's probably sooner rather than later. The political landscape is going to have to coincide well. But at the same time, the flip side of the equation is never underwrite a deal or look at an opportunity expecting that to happen. Truth is, it's much better to look at the industry as is today, underwrite opportunities with what the status quo is right now, and then be surprised on the upside is more how we look at things.
What do you think the valuations will do on safe banking?
I think that, okay, well, I'll just give you a quick example. So Biden was elected in 2020. If you look at some of the cannabis ETFs at that time, you saw the cannabis stock prices generally raise around 3 times in about a 2 months period. And that was simply on speculation that Biden was going to federally legalize cannabis. So when it's actually happening, when it's not just simply gray whiting on the wall, we think that you're going to see a large multiple expansion. The truth is, most cannabis investors today are high net worth individuals, family offices, and a handful of institutions. All of a sudden, the institutional investors can get involved in the space, and strategics start to make acquisitions in the space. I think you'll see a lot of multiple expansion further than that 3x that we saw in the run-up to Biden, coming into office. So the greedy private equity guy in me says, let it take as long as it needs to, because we can put more seeds in the ground. But at the end of the day, we want to see this happen for all the right reasons too. And simply put, these guys can all tell you how tough it is to raise capital in this environment, and it'll help out the entire industry for all the right reasons once it does open up. We got a couple minutes left, so any of you raising money,
Of course.
So how do I get involved? So we're all raising money.
Yep.
So we're raising our second fund right now, and these 3 guys are all raising money in their respective companies as well. As I mentioned, we're investors in all 3 of their companies, and Yulia and I today had the pleasure of meeting for the first time, so she can answer that question.
I am not raising money.
There you go. So 4 of us are raising money. One more question. So this conversation alone is showing that sentiment around cannabis investments is moving in a positive direction. What other evidence of this can you share? Anybody want
It's
to
the
take
bottom. It's the bottom.
Yeah.
You look at GTI or Curaleaf. I mean, they're at the same levels they were 3 years ago, but they're 5 times bigger. It's their actual businesses now.
That's kind of the narrative for us right now, right? Like, you have an industry that's more mature today than it's ever been, and valuations are cheaper than they've ever been. There's a lot of dirt you have to ruffle through, I'll call it. But if you know how to look at the space, if you know the space well, there's a lot of really great opportunity. One of the most common questions my investors ask me is, what's the biggest risk to cannabis? You got to underwrite a cannabis deal like you'd underwrite any other company, but the biggest risk to cannabis is truly duration and balance sheet. Do you have a great company? Yes, let's answer all those questions. But can I get enough capital onto this company's balance sheet so that they have enough runway to last until one of these pivotal events like safe banking or federal legalization? So we like to think about risk in terms of runway.
In terms of sentiment, a quick comment. It is improving. A couple things of note. Just recently, a study came out. More people smoke cannabis than cigarettes now in the United States, and those are going in opposite directions. And on a personal level, my parents are red state Republicans, and growing up, if I told them I was working for a cannabis company, their heads would have exploded. And now they're like, my friend has like some really sore back. Can you hook me up? So that's like tremendous change in acceptability over my lifetime.
And
That's-
I'll tell you that I got excited when I was looking at regulatory actions over the last 2 years. And both from FINRA and SEC combined, I saw less than 10, which means that they're not really focusing on it. They're only finding fault with people that violate other rules around it. And that's great.
Yep. Yep.
I think there's been a lot of cultural normalization as well. People don't look at like stoners as these like hippies that hang out on their couch and do nothing all day. Actually, a lot of prominent business people have already shown that they use cannabis and obviously have done very well for themselves. So I think just from a macro perspective, the demand is there. There's a lot more acceptance, and it's just culturally more normal than it's ever been in the past.
I'll leave you guys with just a fun little statistic. Nearly half the capital we raised in Key Fund 1 came from Texas. So take that for what it's worth. Awesome. Thanks, guys.